Yo, what up, gangsters? This is showing a ton of dropped frames, and I don't know why. Let me see if I can figure this out. This asks for 6,800. Give me one sec. Let me see if I can fix this. And output streaming. Just trying to turn up what kind of resource this is getting. I have no idea why this is showing such a weak connection. Normally it's a-okay. Strange. Let me know if this is even coming through for you guys or if it's like super choppy or something. All right, there we go. This looks like we should be good. I'm seeing 0 dropped frames. I'm seeing solid connection. Let me know if we are looking okay from your end. From what I can see, it looks all right. So I will kick us off. Strange. Always something, I gotta say. But the age-old approach of not knowing how to fix it and just turn it off and turn it on still remains undefeated. All right, so let's get over to the main screen and let's run through the agenda. The game plan for today is I want to do a quick market overview, just walk through what I was seeing in the overall market today. I want to run through some general news. Then I want to dive into a couple portfolio updates, not too many, because there's not a whole lot going on. And then I want to pivot to running through some scans, seeing if we can find anything. And then I'm going to talk to you all a little bit about kind of the upcoming content schedule. I'm going to, each month, I typically try some different things. So that's the game plan, at least, is to walk you through some of the adjustments I'm making. One of them is going to be the primary weekly video is going to come out on Sundays now. I'm actually going to probably tick up the number of pro live streams throughout the week. So right now we're typically doing 2, and I'm going to try to round that up probably to at least 3. I want to spend a little more time talking about like the ins and outs of trading and try to spend a little time diving deeper into that. So more to come on all of that. Before we get too far, as always, we got to say hello to everybody. Make sure you say hello to your friends that you see in the chat. Hopefully you have some friends. Most of us do. I feel like most people that come hang out on the streams at this point have a pretty good sense of one another. And it looks like we have Tommy, David, April. What up, April? Been looking for a while. Excited to join a live. Great to have you here. We also got Zachariah Lawrence out here making everybody pissed off, doing dumb things. We'll talk about that, whatever that was. We also have Travel, Ursel, Jimmy, Shrey, and James, and H. Got everybody. Literally have everybody you could ever on a live stream. So let's talk about the market at a high level first. Flexible grid, you know what's up. What do we see today? Big move, realistically. So we saw a pretty massive jump in the S&P 500. We saw it in Qs. We did not see it yet again in the Russell. The Russell continues to lag. Very important point. VIX contracted a bit. Bonds are 3-month lows at this point. Bitcoin is still trending up, hovering just over 100K. We have materials making lows, comm services pivoting, leading a little bit of this short-term turnover, it looks like. Energy down day, although it opened up. Financials down day. Industrials down day. Tech big up day. Staples massive down day, netting new lows. This is still primary weakness. Whenever we're trying to find things to run to the downside, this continues to be the honeypot. Tons to do there. Same thing with real estate. Real estate at this point is trending sideways, a little bit better for risk premium plays. Utilities rolling over after their slight recovery, still showing a ton of weakness. And then healthcare is still chopping a little bit. I mean, it's like showing some slight recovery from 137 up to 139, but trivial at best. And then discretionary is still massively outperforming staples, which I still continue to find interesting. And then defense sector is trending downside, chopping a little bit. If I were to summarize where I'm seeing strength right now, it's the same places we've seen it for some time. Tech, AI has been really big. You can find a lot of things, even things like Palantir, interestingly enough. I've been eyeing trying to get a re-entry here, but I just can't justify it. So my hope is Palantir will start behaving a little bit better so that I can justify a re-entry. But it looks fine, but it's just not rallying as I think it should be. So that's a little frustrating to see. Same thing with SoFi. These two I've been keeping a pretty close eyeball on. SoFi had a really great day today, up 3%, but still, I mean, like in a broader context, it's not doing well. So neither of these deserve any money from me at this point. It'll be a little, especially for SoFi, it's becoming a little too choppy. Right. So we can see that it's getting this decent sized rally. If we look at, I want the daily range. If we look at a 5-day daily range, average daily range, it's 5.12%, 20 days, 5.78, but in 90 days, 4.9. So leading into this, we were actually seeing SoFi behaving pretty well with more inside days, consistent movements, but this is not good. So this is price discovery happening kind of real time, people trying to figure out what they value the stock at. And so, yeah, these have been, unfortunately, nothing too interesting. Now, of interest from the Discord today, I actually learned, who was it from? Let me see. I want to give credit. Who was it? From Reese. So Reese mentioned that Meta has taken Dana White onto the board, which is a really smart move. Just a really smart move by Meta, because I think Dana White is a fantastic leader. He does a great job running a business like the UFC, and he even kept it going during something like COVID. He's really effectual. Now, I don't think he would do as well in something like Meta just because of how big it is. Like the UFC does a lot of money, but it's not a big company. Now, Meta is just massive. So from that element, very different. But it's also a really smart decision because Trump is friends with Dana, and that just helps. So my guess is it's a pretty wise political decision being made by by Zuckerberg, which interestingly, Zuckerberg also has gotten into jits himself. So I think that, yeah, I think because Zuckerberg's been to a bunch of the fights at the UFC, he's even walked out with Volker before. So yeah, he does like the UFC. I'm sure he has an existing relationship with Dana, but interesting all around, I have to say. So Meta looks good. Really what looks great is Nvidia today. Nvidia is just smashing it. It's creeping up on all-time highs, massive volume today on a relative basis. And it is just up and out, which looks really good. So I have my ratio call diagonal that's been down. So unfortunately, I did not participate in this move through a direct play, but I do have my leverage stuff via TQQs and UPRO, which obviously is a lot of NVIDIA inherently. So I still participated indirectly through those. But yeah, really interesting movement today. And speaking of the leveraged coverage strangles, we have Qs is still rotating a little bit. This gap looks good, but this is an embryonic turnaround in my opinion, because we really need to challenge this lower high and this needs to exceed it. And I mean, if right now it doesn't feel like that to me, it feels like it might come up close to it, hover around before rolling back over. The reason why I say that is just because this move wasn't really sponsored overly heavily. It definitely was an expansion in volume for sure, but it's kind of split. And you can see that 57% of the volume today was on the sales side. And you can see that this is a tiny little body of a candle. That's not great. That means that buyers are coming in, but they're being controlled by sellers and vice versa. But that means it's about equal distribution of interest at this point. So that is something to be aware of. I did add a little bit more risk into UPRO and into TQQQs for the coverage strangle. I'll go more into that stuff a little bit later, but that's where the market's kind of sitting as of today, as far as I see it. And yesterday we ran through all of the stuff for the week coming ahead and all that stuff, so I'm not going to go through that again. Now, I do want to talk a little bit about my performance for last year. And the reason why I want to talk about this is just so everybody knows, right? I'm on here talking about stuff, and I feel like everybody at least should have an idea of what I do and what it potentially does so that people are comfortable with it. Now, I don't have my consolidated 1099 yet, so I'm just going to give you a verbal overview right now. The reason is because I'm going to just take a screenshot of the top of the consolidated 1099, right? So that you can actually see what it was. But I track all of my stuff way more detailed than what the broker does in Excel and Google Sheets. So that's what I will share with you, at least with where we landed. So I think I have a screenshot of it. Let me grab this really quick. I should be able to pull up the screenshot. Yeah, right here. Yep. So this is where we landed for 2024. And I'll zoom in and I'll talk a little bit about it. I think it's going to resize as soon as I move it. Oh, no, it doesn't. That's great. Okay, that's a little too much. That's probably fine. I think you guys can see this. No surprise here. And I had been giving periodic updates as we were going through the year. And what I noticed was a few things. Last year was really, really strong for trading directionally. The other thing that helped me out a ton last year was rotating into the leveraged coverage strangles. So I had started the leverage coverage strangles. I've traded them for a long time, but I flow into and out of them for different reasons, different market conditions. So last year, moving into them was really efficacious. That's where a lot of this return came from the core allocation, was from the leverage coverage strangles. The reason why it's not as strong as what they should have been is because I didn't stay in them all year. I didn't start in them right away. I was still trading other things before I pivoted over to them. Then the remainder of the movement really came down from the speculative allocation. That's what this top section is. So 58% of the total return on the portfolio came from speculative allocation. And within that speculative allocation component, the majority of it came from ratio call diagonals, trading things directionally. I had talked a little bit about that trade in APP. I was going back and forth on whether or not I was going to do a video of it. I still am generally undecided, to be completely honest. If we want to review it, I would be down to review it during maybe like one of the pro live streams or something. The reason why I'm not super jazzed about talking about it is because I didn't really do anything. So there's not much to talk about. It's throwing darts at a dartboard, and that one happened to stick well, right? So I don't necessarily feel warm and fuzzy about doing anything special with the trade. The management of the trade was whatever. There just wasn't a whole lot. But that trade did account for a non-trivial amount of this 29% in that one trade, because that one trade was significant. And for those that didn't see how APP moved, you can see, I think I got into it on like the 11th of September. And I had traded pretty much the bulk of that run up. So that's where that was. The other thing I noticed that's worth mentioning is this bucket. Normally, my short volatility trading does better than this. Now, this is also kind of mislabeled, I realized, because there is long vol tied to this, but it's such a small subset. So I do trade long vol coming into earnings, but it's a really small section of this. It's like maybe 2% of the total return ish. I think it's sub 2%, but like high 1%. So this I thought was interesting though, and something that's topical, because normally trading earnings is a much bigger part of my annual book. And trading earnings generally offers a fantastic return profile because it's completely decoupled generally from market beta. It's not tied to what the rest of the market is doing, which is what makes it so attractive to me. It's a way to have non-correlated returns. But I kept coming across instances where things did not look lucrative. So my overall trading activity in earnings plays specifically was very, very light compared to what it typically is. I track what I would trade. I have my live trades that go on, but then I also track what I would trade, meaning just put on paper trades for all of them. And the discernment was rewarded, because had I executed a more systematic approach and not applied discretion, the overall return for this would almost be negative once I included everything, including fees from the paper trading component. That's interesting. And it makes me a little concerned because I've seen years like that before, but not that frequently. So what makes me nervous about that is I really hope that that is not a new market norm. That would be bad, because this is still hopefully going to be a significant driver of performance for this coming year. But vol is just not priced well. So it leads me to be a little uncomfortable with scaling into the strategies and really leaning on it as a strategy, just because the edge is really declining a bit. Now, zeros, I noticed a little bit of the same. And going forward, you're actually going to notice that this bucket, the 0 DTE, is going to grow. What I mean by that is this is going to be like 0 to 14 DTE. I'm going to bucket all of them the same. Now, I break them down more discreetly in my spreadsheets, but like this would get way too noisy. If I listed like every permutation of what I did here, it'd be really difficult to even track visually. So that's why I'm just kind of bundling all of those short-term index style strategies. That's what 0 DTE means to me here. That's only going to be done in the indices themselves, specifically things like SPX. And I wonder how well it's going to perform this year, because last year, without starting to pivot to other timeframes, zeros did not impress me either. Again, you can see what worked hands down the best on a relative basis. And it was taking market beta, obviously, because the market flew off the handle to the upside, and the trend following, which just find that a little bit interesting to me. So this year, I'm essentially starting with a clean slate like everybody does. And I still have a bunch of levered coverage triangles on. I will continue to run those. And then based on the recent live stream that I did for GameStop this last Saturday, I've actually increased the allocation for the coverage triangle for GameStop to 25K. I was originally planning on just doing a 15K coverage triangle, but it was about 50% of the total group had 25K plus positions in there. So it becomes a little bit more relevant to do it with a slightly larger allocation. Now, to be clear, 25K versus 15K, it's the same shit. It really is. The only difference is the total number of shares and lots I will be transacting at. So for those that have a smaller portfolio or even smaller than the 25K, don't feel any type of way about it, because we will still absolutely be able to track this together. You'll be able to see what I'm doing and how I'm doing, but I do need to now add more risk into GameStop. That's for damn sure. So first things first, let me take a look. I want to make sure that my log is updated, and then I'll port it over into this for us to take a look at. Yeah, so I grabbed a couple hundred shares of UPro today at 94.35. iBit is the same. And then GameStop is good. I need to add more risk into GameStop now, and let's pull this over into my workbook, and then we can take a stroll together. Here we go. Okay. So, this, I think we can probably fly through pretty quick, unless anybody has any questions. Is always happy to go into them. There's just really nothing that exciting going on. So for TQQs, there's literally been no change. The main thing for TQQs is I do have this in the money short call. This in the money short call expires on 17 Jan of this year. And that's a little problematic, because you can see this is already a rolled short call. So the original roll, I can tell you, happened right here, right? Because I can see that there's a massive debit to close this trade out. That tells me right away that this is a rolled position. So this has already been rolled once and is likely going to need to be rolled again. Now, let's take a look at what that actually looks like, the option itself. So we'll go in here, we'll go to TQQs. And we are in the 17 Jan 25s, 11 days out, and we have the 82s. So these are about ready to be rolled, to be honest. They're pretty deep in the money. They're a 67 delta. I will be able to close them for a pretty handsome profit. So if you take a look, the way that this will work is, let me add some over here, just so that I can show you some scratch math so that you can follow along with what's going on. And if this is like, if I'm talking about this stuff and you're like, yo, what the fuck is this dude talking about? Ask, because this stuff is honestly pretty simple, but I know a lot of people are brand new to options. Literally don't feel any type of way. You're not going to ask me a dumb question. I will give shit to people that I know should know better, but for people that I know don't know better, then you guys get all the grace in the world, because you deserve it. Picking up options for the first time or being, a couple years into trading options is not easy. Okay. So we started with 1 and we had 320 credit, and then we closed it for 985. So what I'm doing is I'm going to show you how to track the math for all of this. So this is the first trade. The second trade now is 1, and we got it for 985. And we can close it right now for 525. So what we can do is we can do some math here, and we can figure out what our required sizing is in order to get out at a break even. So you can see all I'm doing is multiplying across, and then I'm going to sum these just like this. So I essentially need to get at least $2.05. If I can get $2.05, that is my break even point for exiting this, right? So the way that this would work is like this, just so that you can see the example all the way through. So let's say that I can sell something for $2.05, and then let's say I can close it out. It comes to expiration for nothing. Now, if we sum all this up, you can see we're at break even. So what I'm doing is I'm able to very clearly articulate and identify how much I need to take in order to be at first a break even before finding way into profit. Now, for selling short calls like this, the goal isn't to be break even, it's to make money. But it's also really, really important to remember where we started. We started with a basis of 80, then we changed it to 82, right? So we started here and then we were able to move it to 82. So what I like to do is track what the total percent change is between these so that I have a little bit of context as I'm moving forward. And I have a specific tracker that does all this stuff just more neatly. I'm showing you literally the back of the napkin math here so that you can create your own versions of this. That's why I spend the time walking you through this thing. So I was able to collect a credit and I was able to increase my basis by 2.5%. It's considerably large because, again, let's do some other scratch math to make this even more confusing. If we have 100 shares and our original sell price was going to be 80 because this was the original strike price, it doesn't matter what our basis is. Our basis is 73.32. We would make money no matter what, right? That's great. But we can also figure out what the difference is in terms of how much more money I stand to make. Now, obviously, the math here is really easy. We just take the new price that I would be able to sell at, multiply, you take the new price I'd be able to sell at less the prior price, so 82 minus 80 times the 100. So I make $200 more on the total profit potential in the trade. So even though in this roll, I rolled for flat money, didn't make anything. It was 985 out. It was 985 in. By still making this roll and increasing my basis by 2.5%, I increased my total profit potential by $200. I will take a pause there. I realize that I'm talking, I don't think it's too fast, but I'm talking a lot. And I have absolutely no idea if this makes sense or not. I know some people, like I think I saw Shrey in here. I know Shrey's following, but I don't know for everybody else if this shit makes sense or not. Okay, so James is following. That's great. Cool. So it seems like so far so good. Shinsasu says, yeah, the point is not to ignore the underlying. Yeah, and the broader point is to think a little more tactically about our roles. Because one of the things that you're taught, or people will tell you, let me know genuinely if you've heard from, I'm going to put it as a poll because I'm literally curious about this. Okay. There's a poll there for you. The poll is make sure you roll for a credit. You've either heard this before or you're asking, the fuck is this? Either of those. And my guess is most people that have at least heard about rolling will be familiar with this concept. And I'm going to explain to you why it's completely wrong. So for those that are saying, the fuck is this? Great question. Let's talk about it. For those that are voting, or for those that have voted, the fuck is this? My first question for you is, are you familiar with what the idea of rolling is? And again, if you are, cool. If you're not, tell me, and I literally will explain. Okay, perfect. So Lauren says, this is why we love Lauren, not only because she has long legs and she's in a long distance relationship with Dayswag, but because she is willing to help everybody learn. So we're on the standard setup now. So that means you guys get the Eric special, which is, well, you guys know what the Eric special is. It's a shitty drawing. That's obviously what the Eric special is. I'm going to see how much you guys can see of this. Let me squish this so that I know exactly where to go. Right. Lovely. That means I have to squish this down too. Huh. That's annoying. The screen is like just missized. Just the worst. All right. Let me grab this. So first things first, we need to change our color. And we have a person. So there's our person. You can see that they have a head and they have arms. And those are obviously, these are the legs. So if you have any idea who this person is, you can shout them out in the chat. This is one of our favorite people. Trey says bling. We don't have bling yet. And I'll explain why we don't have bling yet. We need some money for bling, and we're working on getting the bling, but we're not quite there yet. We have a couple things that we need to do in order to access the bling. Lauren says, I also like your newest video. It was zoomed in into tiny numbers. Yeah, that's awesome. So I'm working a lot with a new editor to try to make the videos more consumable. Again, the disposition for editors is to try to drive up engagement, which is great. But as you know, I much prefer just good content and good information. So I don't like a ton of like screen switches and big noises, because a big thing that they do is they insert a ton of stock images of like a dude like grabbing his face or some shit. I'm like, I don't care about any of that. So yeah, I'm glad that so far that stuff's been good. I'm hoping to continue dialing it in. So this is correct. This would be Lauren. So this is, everybody can shout out Lauren in the chat. But Lauren has reported that she has long legs, and she's also still never given me a fucking haircut, which is complete bullshit. I just went to a new barber when I got back, and he was great. So I'm still happy with the dude that I got, but Lauren is holding out on me. So you cut hair, bullshit. Okay, so Lauren sells to open an option. So we're going to sell to open. Why is my undo button not working? Here we go. Sell to open 1. Doesn't matter if it's call or put. Call/put. And we got $1. Rolling is fake. Rolling means nothing. That aside, it is a common term used for a specific accounting method. Rolling is simply when we close this option, so bought to close, and let's say that we closed it for $2. It doesn't even have to be $2, actually. Let me do a different scenario. 50 cents. We've made money. Rolling is simply the process of tying these trades together. So we have trade 1A, which is the open, trade 1B, which is the close, and then we have trade 2. I guess we'll do trade 1C to keep the thread the same, right? So it's the same. We're tying the accounting together. And then we sell to open a new option for $1. This right here is where the roll is. It's when we close a prior trade and open a new trade that's tied to a prior trade. That's all a roll is. Now, there's a bunch of commonalities and inferences with a roll. So one of the inferences, and this tells you everything you need to know about rolling. The standard inference for rolling is if I close this trade here, this trade we would have made $50. If I close this and open this one, the overwhelming majority of people would not refer to this as a roll. The overwhelming majority of people would refer to this as closing a trade and opening a trade. That's what they would refer to it as. Now, let me show you what people typically refer to as a roll. We have T1A, again, sell to open the call or put. T1B, buy to close the call or put, this one. T1C, and this one, let's say we did it for $1. This one, we do it for $2. And then this one, we sell to open for $2.50. This, just about everybody would refer to as a roll. What do you notice? What's the difference here? The difference is the common inference for when somebody says I rolled is that it was a losing trade. It doesn't have to be a losing trade. Again, going back to the beginning, Stelio is right on it. Same thing with David. Perfect. Nice job. And the context of a roll in a nutshell is simply when we're tying the accounting between two different trades together. The reality of things is that they are two different trades. That's it. So rolling is a massive mental gymnastic. Now, that being said, I roll all the time. I'm talking about this rolled short call right now. The reason why we use rolling is it helps us consolidate the P&L for an individual trader position. But again, we normally would not refer, let's say that I closed this one. I closed this trade in this example and I made $126 and then I sold this one. I wouldn't refer to this as a roll. Functionally, that's what it is. It's not what I would refer to it as. This would just be closing a trade, opening a new one. And then this example up here would be what we would refer to as a roll. So first follow-up question for Lauren is, do you understand what a roll is now, at least in concept? And I need to open my window. That's our first question. Do we feel comfortable with what a roll is in concept? Simply closing a trade, opening a new one, tying the accounting together. I'm going to clear this out while Lauren is confirming or denying if she's on board with us. A little? The fuck is a little? Lauren, give me an example, a hypothetical of a rolled trade, a rolled option to the best of your ability. So if you were to roll an option, what would it look like? And you have a couple examples right here to work off of. Now, a couple notes while Lauren is doing that is, okay, so Lauren says, I understand what the roll is. I don't understand the why. The true reason why is to tie the accounting together so that you can track the overall movement of a position. So here's essentially what this means. I will close this. In this example, I had the 80 Ds, or I'm sorry, the 20 Ds, 80 calls. I sold them for $320 and I bought them back for $985. That realized a $665 loss. The purpose of rolling is to put on new positions that can overcome this loss that are essentially tied to this original trade. That's the purpose of rolling. So it allows us to tie the accounting together for something. So then at the end of this, I can see whether or not the adjustments made to this individual position either move me into profit or not. Now, to the broader point, you don't need to track it this way. You literally could track them just like I do right here and track them as each individual short call and just see how it comes out in the wash. That is entirely reasonable, viable. But the purpose of rolling is to hone in on individual positions a little bit more closely. So that's the idea behind rolling. Now, one of the things that people are told is what I put in the poll, which is when you roll, you're told that you have to roll for a credit. You have to roll for a credit. And what you're told is that if you don't roll for a credit, you are potentially, or you are locking in a loss. Does that sound familiar to anybody specifically that has answered, the 62% that has answered heard this to the poll? Does what I just say sound familiar? Where you were told that if you don't roll for a credit, you're locking in a loss. Okay, so Reese is familiar with it. Anybody else? I just want to see how common that element is. Yep. Okay, cool. So what if I told you that you can roll for a debit and not lock in a loss and still have a net profitable roll at the end of it? Does that sound wrong? Does that sound off from what you've heard? Does what I just say, does it sound like, what's the reaction to it? Does that sound normal? Okay, so Travel Ursel says, need an example. So then Travel Ursel, let's say that I was just an internet dude, meaning you don't know who I am, you don't know my background, you don't know that I just wrapped up my 18th year of trading, and I kind of know what I'm doing at this point a little bit. Let's say that I was just a random dude on Reddit that was posting, and I said, you don't have to roll for a credit in order to have a profitable roll at the end of it. Would you say that person is right or wrong? Any input there? Shinasu says, because the underlying makes more profit than the credit would be. That's not it. That's actually not it at all. The best answer as to why it is from Tommy. Tommy has the correct response. So Kai says roll down into the money or out in time. Those are different ways you can roll. What I'm emphasizing, though, is that the statement that you've heard before, the statement of you have to roll for a credit, otherwise you're locking in a loss, is patently false. It's wrong. It's dead wrong. It is not correct. You can roll for a debit and still have a profitable roll. That's the point I'm trying to make here. You do not have to roll for a credit. You do have to track the basis of your rolls. So let me show you. If we take a look and we see $3.20 to $9.85, $9.85 to negative $5.25. So this, if we needed to roll for a credit, that means this number would have to be at least $5.26. That's the only spot that I would get a credit, is if this was $5.26. That gives me a 1 penny credit over this. But what I just showed you is I only need 205. So that means if I sell this for $2.50, that is a debit from this. That means I'm buying to close this for $5.25. I'm giving out $525, and now I'm only taking back in $2.50. That's less. That's not a credit. That's rolling for a debit. But I still make money. I would have made $45 in this trade. So you do not need to roll for a credit. So what that means is, in this example, when I go to close this trade to roll my short call that's in the money, I do not need to get $5.25 or better. I need to get $2.05 or better. That's to make a profit. To better than $2.05. $2.05 would put me at break even. So $2.05 or better was incorrect. I should have said $2.05 for break even or better than $2.05 for profit. So as long as I make $2.06 or better, I'm now making profit on the roll. Super important. super, super important. And I'm going to show you why this is so important. Let's say I thought, and let me close this. Let's say that I thought I needed to make the difference here, right? So I need to make $5.25. So now I need to eyeball, where can I get $5.25? Well, I can get it out here at 87. So let's use this for the example. So now let's say this goes here. This goes here. I realized I grabbed the wrong ones. And I'm going to give you two examples. So first thing is we know we need to make 205. This is what we require. So I'm going to give you two example rolls. We have one here, one here. I just showed you that we could do the 87. That would make us 255. So that means from here, we get a 6% change in our basis. And then our total profit increase is this. Starts at 200. And then in this case, in addition to the 200, so we can look at this one of two ways. We can look at either from what our basis increase from the original strike is or from the additional strike. So from the additional strike would be this minus this divided by this. Oh no, times, my bad. I was redoing the other thing. Times this times 100. So now it's $500. So that means from our original position, we've now increased our total profit potential by $700. I want to make a really important point here. So here, this should be 525. That's dyslexia kicking. So here, this shows me I would have made, hold on. No, I think I messed that up. Give me one sec. Sorry. What is this? 555. That's it. My bad. I knew it was 555. So that means we have a 30-cent credit here, right? So this plus this. So in this transaction, this is worth $30. So here's what's happened. And let me update. This will be our focus topic for today. Rolling options. Since we've officially dove down this rabbit hole, which, as you know, I'm happy to. So we've increased our total profit potential by a certain amount of money. And I'll show you how we track that. This shows our net P&L. So this will pretend will be $0. And what I'm doing is I'm going to sum this and then I'm going to give us two scenarios to look at. So scenario one will be this scenario. Scenario two will be this scenario. And I want you to compare something so that you can see what my brain sees. So hopefully you'll be able to analyze this stuff more efficiently. So what my brain sees here is if I allow assignment, that would be this plus this. This I can get rid of because I don't really care. So I would sum these two together. So that means I would get this amount of money, 350 from the options premium. And then I would get $500 from the share basis improvement. So my total P&L, if I allow assignment in this role, is $850. And this is me ensuring that I rolled for a credit. Okay. So this whole thing is scenario 1. Let's take a look at scenario 2. Scenario 2, we've already identified that we just need 205. That's all we need in order to get out of this for a profit. So let's take a look instead at where we can get 205. So for 205, we can go all the way out here to the 96. So let's take a look at that. Actually, no, I want to do it for a small debit. My bad. For the example here, this is a small debit, 97. We get it for 204. So here we go to the 97. This would represent an 18% improvement in our basis. I should have wrote this formula correctly so that I don't have to keep doing this. There we go. And then what did I say? We get 204. So if we close this out for no money, we make 204. Slide this down one. So from the option side of things, we make this plus this. Oh no, I'm sorry. I said we needed at least 205. So that's already rolling for a debit. That was my bad. So we need this one. My bad. We need the 96 for 209. That gives us a small total credit. So we need the 96 for 209. Because again, just a quick reminder, because I kind of messed that up. This represents rolling for a credit. This represents rolling for a debit, but paying attention to this, which is what we actually need in order to break even. So in this scenario, you would have made $4 on your premiums. But guess what you make on the trade in total? This is the outlier way of rolling option. Notice the difference. Which one would you prefer to walk away with? Would you rather roll for a debit and make way more money on your trade? Or would you rather follow blindly the statement you've heard of, I have to roll for a credit and make less money? That's the question here. Travel says, so you can close for a loss and use that capital for another trade, ultimately making money. That could be viewed as a roll for credit too. That's not this at all. Unless you might be talking about something different. Trevor also says, I think it's all about how you track. Some roll with a different underlying because ultimately it is to earn money and use the capital for the best trade at the time. Oh, I see. Yeah. I don't know anybody that would roll into a different underlying, because that breaks the purpose of a roll, right? Again, like, actually, let's just look it up really quick. I bet you it would be on Investopedia. Option rolling Investopedia. So Investopedia tells us, oh, here we go. This is better because it's not just about rolling down. It's about rolling an option. Let's get rid of this one. This definitely ain't it. My bad. A roll down is accomplished by closing the initial contract and opening a new contract for the same underlying asset at a lower strike price. And I think that's like the general understanding of a roll, is that it's not tied to different tickers. Like I don't roll from trading gold into S&P. Like they're completely different things. The entire premise behind a roll is that you're trading a specific ticker. Travel says, yeah, but the point is that if you get stuck in thinking you must roll for a credit, may not be the best thing to do at the time. Need to look at the bigger picture. Of course. Yeah. But that's a completely different thing. I would just clarify those two different concepts. Rolling is in the same ticker. It's not rolling in different tickers. If you move to a different ticker, it's no longer a roll. You're just closing for a loss, which you do want to roll anyways, but then you're trading something different. The point I'm making more broadly back here is that you don't actually have to roll for a credit in order to make money on the trade. That's the main point. You literally make 65% more money rolling for a debit and prioritizing the basis improvement here from 82 to 96, which is a 17% basis improvement, versus 82 to 87, which is a 6% basis improvement. Yes, in this scenario, the option holder made way more money on the option, or the option seller. In this case, this is what I would do. The option seller made $4 on the options. Doesn't even matter. But I would have made $1,400 on the underlying. This person doesn't make anything close to that on the underlying. They make $500. So almost a third. So that's the broader point here, is that the statement that you've heard at some point of rolling for a credit is complete bullshit. You do not have to roll for a credit. Shanasu says, so people who talk about that roll for a credit in the quote only talk about each trade, but ignore the whole chain that led there. That's exactly correct. And it's a giant mistake in accounting. And this is one of the bigger problems I have with trying to come up with blanket rules for things as a trader. The blanket rule of roll for a credit is designed to protect you from you. Because if you do not track this number right here, you absolutely can roll and lock in a loss, a losing position. So the reason why you're told to roll for a credit is literally to give you a generalized base rule that it's just overfitting. It means it allows everything to work in it, but you lose so much specificity. You lose a ton of money potential in the trade. So this is showing you that you don't have to roll for credit. You have to pay attention to the money in and the money out throughout the entire trade. And always remember, in this instance, when we're talking about short calls, is that it's tied to an equity position. And that's always going to be the basis, primary driver, profit mechanism of a covered call or a ratio covered call. This is why I insist that outlier traders understand the concept of profit mechanisms. Because if you don't, you might get too wrapped up in trying to manage this short call that's in the money. And you might be sitting there saying, well, I got to make money on these options. I got to make sure I make some money on these options. And it's completely misplaced. You're focused on the wrong thing. This is the quintessential example of focusing on the tree and not the forest. That's what happens here, which we obviously want to avoid. There's no reason to get so myopic with something like this. So that's the concept of rolling, and why what you've heard about needing to roll for a credit is completely wrong. Shinatsu says, I'm gonna be honest. I think you just saved me a lot of money. Gonna have to change them things tomorrow at open. For sure. Definitely. And this is, again, this is something, it's an artifact of people being told one thing that's just not accurate. So yeah, hopefully useful. Cool. So that all aside though, I actually do need to look at, let me clear that out. And I need to look at what I'm actually going to roll this to. So we know, based on that previous ensemble, that I need to make at least 205 because I need this, plus this, whatever it is, or the net here. Hold on. No. 320. So I need 320. That's what this represents. So now I need to see where I can get that. Let's take a look. We are right now at the 82. So we can get a really strong basis improvement all the way out here to the 93s or the 92s. So this is where I will go. I will probably take them in tomorrow, and I have no problem kicking these out 46 days. It's a little bit long. These are paying 6 cents a day in theta. Let's see what the 25s are paying. Actually, I lied. I'm probably going to want to come into 25 and tighten these up a lot. So I can take these in, and again, I still need that 320, which I can get here at the 88 and a halves. So I'll probably take this trade instead. I typically prefer rolling less further out in time so that I maintain strike price, spot price sensitivity, meaning I can stay relevant to what the current price of the underlying is. So that is likely what this looks like. Phil, what up, Phil? Talking about Freak a Leak. Do you think GME is ready to bone? 38. Take a look. And as always, thank you for the $1.99. You know I'm cheap. $1.99. I'll drop what I'm doing and take a look at what you want me to. About as said. I mean, it's kind of sad to realize how cheap that is, but I'm thankful for it. 38. Looks unlikely to me, at least in the near term. What do we have? What's the probability? Let's say the probability within 2 weeks of 38, 42%. So less than 50% chance. That does get a lot better if we move out about a month. No, I'm sorry, just over 2 weeks. Gets us to 46. And then if we look at about a month, that's where it looks possible. 60 and a half, 60.5%. So it looks like 38 is less likely in the short term. And I mean, that was my instinct looking at the chart, just seeing where things are. It's still doing a great job consolidating, churning, grinding up. This is exactly what we want to see. But this kind of behavior just doesn't lend itself to like really fast short-term moves. That's not what this is at all in its construction, right? So you can see that it has a really steep aggressive trend line here, but it is not looking like it's gonna fly up and out. So good question. This actually leads into the GME covered strangle and what we need to do, which is I need more risk now because I've since sized it up to 25K. We're only using 13. So that means I need to sell more short puts. Tommy says GME need to buy Bitcoin. That would cause a spike. Yeah, I think everybody's obsession with GameStop buying Bitcoin honestly is a little bit misplaced. Like I think that there's nothing wrong with it, but GameStop is still a company that has to create revenue. And if it starts going around and buying Bitcoin, it again starts to transfer more into a holding company, which could be fine, right? Like if that's what it wants to do. But that kind of company just takes an entirely different form than a company that's still trying to generate and drive revenue. So yeah, my opinion is that while nothing wrong with it, I don't think it would be the optimal move as compared to finding ways for the stock and the company to drive more revenue. I think ultimately that's what it needs. That's my 0.02. I need to get our dinner order rocking and rolling here. What are you guys thinking for dinner? I think Mel was talking about pizza before, which I am not afraid of some pizza. We can do pizza. Oh no, we'll do Carl Strauss again. I bet you that this will get through first try. We'll see what Mel wants. It's funny, her and I spend a slightly embarrassing amount of time texting one another for two people that live in the same house. It's a little ridiculous, but it's kind of hilarious at the same time. Especially with the way that our house is set up, you can kind of not know where each other is in the house, which is kind of fun. All right, cool. So that wraps up most of the stream. So for anybody that feels like popping off, feel free. That's the main stuff. I'm going to hang on for a few minutes because I want to run through a few scans. And then I'm happy to take a couple questions as well if I'm able to. So if you have anything that you would like us to hit that we didn't, feel free to throw it in the chat. I'll take a look. And then in the meantime, your boy is going to start running through, trying to look for some scans. Lauren says, I had pizza. Pizza, that might be tomorrow. Yeah, Mel already ordered. It was great. Fast and efficient, just the way we like it. Let's add this. Beautiful. All right. Let me go grab Thor really quick. I'll be right back. Well, I thought he was outside the door, but he is not. So he's probably getting his munch on, which is sick. Travel says, yes, IWM recovery, what we need. Need small caps to participate. I don't think additional rate cuts are it. I think that it is recovering. So the fact that it's basing here looks good, but yeah, I mean, it needs a little bit more than this. So the thing about small caps is they're likely going to be negatively impacted by this for a little while. And things tend to move slow. So that's the Cliff Notes version. Is I think that we continue to need the company itself, or the companies, small cap companies, to perform well, which I just don't think the environment is super rich for it just yet. So yeah, good question. Reset. Hold on, let me get. Ami says, when rolling short calls with a ratio call diagonal, do you make sure to roll before they go deep in the money? No, not necessarily. It doesn't matter. They don't have to be deep in the money. You just have to track the basis carefully. So a lot of it depends, as always, on how you're wanting to manage the trade and your disposition towards the underlying, but they can be super deep in the money. And it's really not a problem, provided that you're, again, doing your math correctly. What I mean by that is, if we go back to this and we think this is fine, I can do it over here. Let's say on the long option side of things, you're making $500, but on the short call that's in the money, you're losing $200 as it goes deeper and deeper in the money. This ratio, let's say that you have 5 here and 2 here. These started at an 80 delta. These started at a 30 delta. These aren't going to overwhelm these deltas, provided that it's set up properly. So the only time that I would be cautious about the short calls falling deep in the money is if you start seeing no extrinsic value and something like a dividend's coming up, then yeah, just because you want to avoid assignment. But again, assignment doesn't even really matter, because you still have this part of the position to offset the risk. So whenever you're assigned, you can just sell the calls, because again, if you get assigned, your risk profile is literally the exact same, because you have these. You're just not short options anymore. You're short the stock. But the delta ratio is already set, right? So these, if they're deep in the money, these would be trading close to a 1 delta. You get assigned at a -1 delta, but that variance is already captured because these would be in so much profit. So it doesn't really matter. It's just slightly more annoying. So if you think that you're at risk of early assignment, then yeah, I would definitely roll the calls if I don't want to unwind the position. But that being said, if they fall deep in the money, it doesn't matter. The same rules for short calls still apply, where the further in the money they go, the more you're going to have to fight to get a meaningful adjustment out of them. The further out in time you're going to have to go to get a meaningful adjustment out of them. So it really is just going to come down to what you feel like doing with the position. But there's no additional risk in reality if you get assigned early on them. It's just more steps you have to take. Tommy says, Matthew says, popped in to say hi. Great to see you, Matt. Thanks for jumping in. H says, what effect does being added to the chain usually have on a stock, if any? Notice 65 calls were added a few dates for GME, which I was scanning around. Not really too much, especially because they're so far out of the money. So it's not really going to drive any significant underlying behavior from the market makers themselves. They'll just get added as liquidity comes in for them. That's why you don't see a ton of strikes offered on stuff that's super far out in time. They wait until it comes closer in time where there will be demand for it. Reese says, when to add kicker options when you think the underlying is going to run a lot. That's the easiest way to answer that. If you think it's going to be a slow, steady grind up, then kicker options don't really do you anything. But if something starts moving a lot, or if you expect it to have a big aggressive move, then kicker options, that's normally when they become part of the equation for me. Lauren says, Fubo did great today. So glad I sold my options on Friday. Let's see, Lauren, how you did. Mostly want to see that you sold at a good point. I don't care what they did today. Friday. Yeah, I don't see why you would have sold Friday, to be honest. Not knowing, that this was going to happen. This is crazy. This is just pure luck. But this is still not the right time to sell. I feel like you know this enough by now. You should know this. It's still going up. You could have scaled out a little bit. That's always okay. But when it's doing what you want it to do, you typically don't want to cut yourself short. And you continue to do that. You've done that a few times now. So I actually would identify that as something you have to control for before you put these trades on in the future. Again, that's not even accounting for the move that happened today, right? Like, you can't tell that this is going to happen. It looks like it popped up out of nowhere. There was no expansion in volume. So I'm not, hindsight being, knowing it's going to go up to 506. Nobody knows. But the fact that it went from $1.26 to $1.37 to $1.46, like, that's still the correct direction each day successively. Lauren says, I sold it because I thought it was a dud. Did you define that before you entered the trade? Meaning, if it doesn't do what I want it to do in X time frame, then I'm going to get out. Because if you did that, then I have no problem with the trade, with you making that decision. But if it was based on like a gut feel or just something that's random, then yeah, I would have a problem with that because it doesn't really mean anything. It's just based on randomness. It's actually why in NVIDIA, why I took my ratio call diagonal down. It started doing what I wanted it to do. And I had scaled out on strength, which is not my norm. But for me, it was defined by time because trading a ratio call diagonal, there was a long option component. So if it's not doing what I need it to do in the correct amount of time, then I start taking on risk. So this is an example of managing by time, not so much the price movement. So if you, Lauren, ended up taking that down because it was like a predetermined spot for you to take it down, I literally love that. I think that's awesome. That's good following the plan. If it was random, which it sounds like by you saying I was cleaning my portfolio for the new year, then that's straight trash. And you are better than that. Don't do that. That is a straight trash move. Straight trash. And you are better than straight trash. You have to define this stuff before you go in. You know this by now. You already know this. All right. So I'm going to just spend some time doing shit that I normally would do. I need to go on Reddit. I need to respond to a post that I made. So I'll keep the stream going just because I'm going to work on stuff. But this is also, again, a reminder for another great exit point because I'm not going to be looking at the chat quite as much. I still will see if you guys have anything that pops out. But otherwise, if you guys feel like creeping, by all means. If you don't feel like creeping, thank you for coming to hang out. And I think the cadence for this week will be the same. I'm going to look at changing the cadence a little next week, I think. And the other thing is for those that are in the Outlier Pro Patreon, I just launched a post and posted in the Discord that I'm starting a program, Outlier Trading Pairs. So what I'm going to do is collect information from you all, and I'm going to link you up with a trading partner that you're going to meet with every single week for at least 30 minutes, up to whatever you feel like, but at least 30 minutes you have to commit. And I will give you each week, I'll give you an agenda literally for the month ahead of time of what you should be focusing on with your partner. So things like focusing on technical analysis, and then I'll give you some ideas on what you can do during the calls. It's just to give you ideas so that the calls are productive. So if you feel like participating in that and being paired with somebody and you're willing to make that commitment, then definitely grab that link and sign up. I hope that you guys will enjoy it. All right. So now I'm just going to run through some scans. You already saw one that I had on in the beginning, GEV. So this was entered here. And I actually think it's probably time for scaling in. So what I'm doing is setting an alert to see if there's any sort of pullback, but this is a confirmed upside move. It has terrible earnings that still reported well somehow. That part I don't fully understand, but it absolutely smashed earnings back here. So this one is on the short list of stuff I need to do. This one is, oops. Okay. And, oh yeah, I forgot. I was supposed to talk to you guys about doing like the annual performance audit. I'm probably just gonna have to do that in like a newsletter or something. I got a ton of shit I'm supposed to do with respect to videos. So this one I think is just gonna get added to my writing topics. This one. All right, and let's run through some of these now. So SMMT, definitely consolidating and tightening a little bit too. But another fucking therapeutics. I need to get rid of these. I think I'm gonna update my scan. I just want to get rid of health, because health does this too much and it dominates the report ASTS. This still looks weak, man. Lower high, lower low, higher low, lower low. This, I actually, not even gonna lie, I prefer this for a fade. Not a lot you can get to the downside, but with a little bit of leverage, it can make sense. We'll do that. Too wide of ranges. This has done fucking nothing. Still has good VRP. I've traded this a couple times. It's so illiquid though. Like insanely difficult. I have nothing on in it right now because you can't trade it. This is definitely consolidating, but not in the way that I would want. I need to change this consolidation scan. So I'm actually going to update this now while we're on here. Where's this at? The issue I have with the consolidation scan is what I'm specifically looking for are things that are potentially setting up for breaking out. The other thing that I use the consolidation scan for is to search for things that might be good for risk premium style trades, right? Because things that are consolidating, trending sideways, they tend to have some sort of news or information that's pending that's not out yet. So I might update that, but let's continue ANF. No good. D, no good. N, AN, HLN. Yeah, like none of these are really, I don't really like it. So what I'm doing right now is looking for generally long deltas. So I don't want any of this. Like this looks interesting. Strong breakout today. So this will also get added to my hit list. GEV, WGF. And what I look to do is have at least a few. Let me grab the chat, by the way. I can at least see you guys over here. Okay. David says GEV is going nuclear. Is that a pun, or are they actually like adopting nuclear energy? Did you guys see the thing by Enron? This? Damn it. This. You guys see this? Micro nuclear reactor for your home. That is about as fucking cool as it can get. That is so sick. I didn't retweet this yet. I'm gonna need a couple of these eggs. Fucking sick. Jean says, look up their history. Yeah, I mean, they've been around for a long time. They've had issues before, but super cool. I just thought that technology is, speaking of going nuclear, that just looks awesome. All right, let me get back into my screeners. VGS. So this one's on the list. Rocket Lab. How's Rocket Lab doing? Ah, Rocket Lab looks okay. Finally. Soft breakout, but I don't hate this at all. So this looks like, what do you think? Go out to the Junes, a little more liquid. What is this? 790, 810. Got the Julys. About the same width. Yeah, this looks good. 40 cents. Pretty illiquid on some of these, though. Have to be pretty discerning. The at the monies are okay. Theta is about 2 pennies. 2 pennies all the way out. So I would favor the gamma on these. I would take something with like a 3. Oh no, hold on, I'm fucked up. Theta is 3 pennies, gamma is 2. Yeah, okay. Gamma is 2 all the way around. So I would take the slightly cheaper Theta. Look at this bad Larry. Stop. 7. Probably initial stop would be here. 25, 1. Oops. Let's add 25, 21. This is good. So then for standard modeling, $100,000 account, something around 0.5%, something like this. You get like a 3 lot. You're paying 2 pennies a day in Theta. So if you come in to like 25 days here, you're getting 5 pennies, 4 pennies. So I would come into something like this, these 37s, whatever's most liquid when the market's trading. You get your 84 cents. This covers the entire extrinsic value while you're in. 246. We need a little bit more. We need these 6s. My bad. So for those that don't know what I'm doing here is I'm seeing what my extrinsic value is here. So on these, I'm paying on the 29s that I would be buying, I'm paying 2 pennies a day and I'm getting a 3 contract. So that means I need 6 cents a day to overcome that theta. So if I come in here, I can get 6 pennies at a 35 delta. That's a little too much for me. I don't want to be at a 35 delta. If I come in, these are also 35 delta. So I probably would take it. Take these or these, slightly less. I think that's okay. I'm not worried too much about the theta because the primary profit mechanism in this is still direction. It's not for expecting it for it to be rotating sideways for too long. I just want to offset some of it if it does, which is exactly what these do. So this, for example, would leave me exposed on a penny. So that's legit. So Rocket Lab will be added to the list. And back to the scanner. NVIDIA's back on. I still think it needs to overcome that recent move. UAL. Has earnings coming up. And CEG. I've been in and out of these guys for a while. This looks really good. They have super cool tech. TSM is showing up. Yeah, boy. Solid breakout. Really solid breakout. The stop goes here. TSM. And let's Look at the fucking A. He is literally breaking out. That's nuts. What is the positioning for earnings? Earnings are what? 15th? So the 17 Jan? Bullish. Really bullish for something like this. Might take a bite on that. I don't really have exposure to financials. Sick. All right. Sweet. All right, gang. I'm gonna hop off. I'm gonna work on a couple videos. Thanks for hanging out, taking a look at some stocks. If you guys need anything, hit me up in the Discord. Be an outlier. I will see you all later.